Welcome to the Deep Dive. Today, we're really getting into a fascinating story, CoreWeave.
Absolutely. A company that's made a truly remarkable shift.
Yeah, I mean, going from the sort of fringes of the crypto world
Right, which is already volatile.
to suddenly being the biggest IPO initial public offering of the year so far, and right in the middle of this AI boom.
It's quite the journey, and the stakes involved, well, they're incredibly high with their business model.
Okay, so let's unpack this. Our mission today is to really explore CoreWeave's,
Yeah.
explosive growth. Look at the details around that IPO.
Which had its own drama.
Exactly. And then weigh the huge risks against that high reward potential. We're drawing on the insights you've shared with us.
And that context is just so crucial, isn't it, for anyone trying to grasp what's actually going on here? Because it's more than just a stock ticker. It's about how this one company is navigating, maybe even influencing these massive shifts happening with AI.
Yeah. And CoreWeave is such a prime example of that dynamic. So to really get CoreWeave, you kind of have to rewind, go back to where they started. It's pretty unlikely.
It really is.
Imagine this company, right? Facing that infamous crypto winter back in 2019, their main business is basically collapsing.
A tough spot for anyone in that space.
So how do you manage that pivot from the edges of crypto to being a leader in AI infrastructure? What was it about that moment and what they already had?
That's really the core of the story, isn't it? They started out mining crypto.
Right.
So they'd already brought up a whole load of GPUs, those graphics processing units, essential for gaming, but now absolutely critical for AI.
Okay, so they had the hardware.
Exactly.
Yeah.
When the crypto market tanked in 2019, they didn't just fold. They saw this stockpile of GPUs and thought, wait a minute.
Opportunity.
They repurposed them, completely shifted focus to providing high-performance computing specifically for AI tasks.
Smart move.
And their business really, really took off in 2023, especially, after ChatGPT launched and suddenly everyone woke up to AI's potential.
Which created this huge demand for the kind of computing power CoreWeave was offering.
Precisely. The demand just exploded.
And the speed of that growth, I mean, frankly, it's kind of mind-boggling.
It really sets them apart.
Just think about this. Their revenue between 2022 and 2024 didn't just double or triple. It multiplied by over 100 times.
100x. It's hard to even process that kind of jump.
And then just in the first quarter of 2025, boom, nearly $1 billion in revenue,
Yeah.
a 420% jump to $981.6 million.
And here's where it gets really interesting, right?
Yeah.
Because growth like that, it just forces you to ask, okay, how are they doing this? And crucially, is it sustainable?
Right. That kind of growth obviously built up huge excitement for their public offering.
Naturally. The biggest IPO of the year.
But that IPO journey itself, well, wasn't exactly a straight lineup, was it?
No, not at all. Demand was actually weaker than they'd hoped.
So they had to price it lower than planned.
Correct. And then Nvidia, interestingly, actually stepped in, invested in the stock, helped sort of prop up the offering.
A big vote of confidence, I guess.
Okay.
But then things got bumpy again.
Yeah, initially the stock took a hit. The wider market sold off pretty hard after those Liberation Day tariffs President Trump announced, global trade worries.
Okay, so a rocky start.
But then the story completely flipped.
Right. April seems to be the turning point.
After bottoming out then, CoreWeave just started climbing, riding that huge wave of enthusiasm for AI stocks generally.
And climate did. From that $40 IPO price.
All the way up to $187 on June 20th.
That's almost a 400% gain in just a couple of months.
Incredible run. Now, it has pulled back since that peak, dropped about 28%, trading around, $125 now?
Still, quite a ride.
Definitely volatile.
So fundamentally, what are they actually doing? What's the core business?
Well, at its heart, it's actually pretty straightforward. They build massive data centers.
Okay.
And they supply the computing power from those centers to their customers.
And these customers are big names.
Oh, yeah. We're talking Microsoft, Nvidia itself, OpenAI, major players in the AI space.
So they're basically providing the picks and shovels for the AI gold rush.
That's a great analogy. They're supplying the essential infrastructure.
But that model, it sounds like it could have some built-in risks too, like
Yeah.
relying on just a few big customers.
That's a huge point. The customer concentration risk is significant. Last year, Microsoft, more than half of CoreWeave's total revenue.
Wow. Over 50% from one customer.
Yeah. And actually, there was a report suggesting Microsoft might not buy more capacity from them.
Ah. And that put pressure on the IPO?
Exactly. It fed into those initial concerns about demand and, long-term stability. It raises that big question about diversification, doesn't it?
Definitely.
Hmm.
How much can you rely on just one or two giants?
And this leads us right into the high-risk part of this high-risk, high-reward equation.
Okay.
Because, yes, it's one of the fastest-growing stocks out there, no question. But it's not profitable, and that lack of profitability, frankly, makes it inherently one of the riskiest plays.
And a big part of that risk is debt.
A massive part. They've taken on $8.7 billion in debt, and it's high-interest debt.
Why so much debt? Just buying equipment?
Primarily, yes. To buy all those incredibly expensive GPUs needed to build out their AI infrastructure, they need immense scale.
Let's put some numbers on that debt impact.
Okay, look at Q1 2025. They had an operating loss, right? $27.5 million.
Manageable maybe for a growth company?
But then look at the interest expense on that debt for the same quarter, $263.8 million.
Whoa. So the interest payment is almost 10 times the operating loss.
Exactly. That's a stark contrast. And that high interest rate, it tells you how much risk the debt holders see. Remember, this company basically had no revenue just 2 years ago.
A huge leap of faith for lenders then.
Absolutely. And there are other risks, too.
Like what?
Well, their entire business hinges on AI continuing to grow at this incredible pace.
If AI demand cools off, they're left holding very expensive assets.
Precisely. And critically, they need to actually make a profit on these GPUs before they become obsolete and need replacing, which happens fast in tech.
And is that clear yet? Whether they can actually do that?
It's really not. The business is just too new, growing too fast. The unit economics, as you mentioned, aren't proven yet.
And the spending? The capital expenditures?
Oh, the capex is just enormous. Q1 2025, they spent $1.4 billion.
More than they made in revenue that quarter?
Yes, more than revenue. And they're planning to spend, get this, $20 billion to $23 billion on AI infrastructure this year alone.
20 billion with a B.
20 to 23 billion. It really makes you wonder, how sustainable is that level of spending, that rapid capital-hungry expansion?
So $8.7 billion in high-interest debt, pouring billions more, tens of billions potentially, into capex. That is a monumental bet, isn't it?
It's colossal.
As an investor, you'd need some serious conviction about AI's future to jump into that. So with all that risk clearly laid out, why would anyone see CoreWeave as a buy?
It's a fair question. The risk profile is definitely not for everyone, but for the right kind of investor, it actually does present a compelling case, even with all those flags.
Because of the growth.
You just can't ignore that growth. It's explosive.
And I suppose you could draw parallels to, say, Amazon Web Services or Microsoft Azure in their early days. Those cloud models eventually became hugely profitable.
That's the analogy people draw. Now, let's be clear. CoreWeave is likely years away from profitability. Years.
Right. And those unit economics we talked about, making money on each unit of computing power sold, that might take years to improve too.
But even so, look at its valuation relative to its sales.
Okay.
Based on their current revenue run rate, like projecting their current quarterly revenue out for a full year, their price-to-sales ratio is around 15.
15. And how does that stack up?
Well, the sources we looked at suggest that seems maybe surprisingly low for a company growing this fast.
So the market might be pricing in the risk, but maybe underappreciating the sheer speed of growth. Or is it just reflecting the huge costs involved?
That's the multi-billion-dollar question, isn't it? It raises that interesting point. Is the market seeing the risks clearly, or perhaps missing some future potential? Or maybe the high capex model just warrants that kind of caution.
So what does this all mean for you, the listener, trying to make sense of the investment landscape right now?
Well, the ideal investor profile here seems pretty clear.
Which is?
Someone risk-tolerant, definitely risk-tolerant. Someone looking specifically for a pure-play AI stock.
And if that's you?
Then a strategy like dollar-cost averaging makes sense.
Meaning invest smaller amounts regularly over time.
Exactly. Because this stock is almost certainly going to stay volatile. There will likely be dips, future opportunities to buy in, potentially lower.
So bringing it all together, CoreWeave's story really captures this powerful tension, doesn't it? Jaw-dropping growth on one side.
And these enormous financial and operational risks on the other.
It really feels like a miniature version of the whole AI boon itself. Huge promise, but built on some potentially shaky foundations.
Absolutely. And if we connect this to the bigger picture, CoreWeave's journey just perfectly illustrates the kind of immense capital needed, the intense competition involved in building out this fundamental AI infrastructure.
Right.
So for you, our listener, wanting to get up to speed quickly and really understand these dynamics, this deep dive offers, I think, a really valuable window into a company right at the center of it all.
Indeed. And maybe it leaves us with a final thought to chew on.
Hmm.
Given CoreWeave's incredible pivot, from crypto to AI, its deep reliance on debt and just massive spending for growth, and its unique spot-selling computing power to the tech titans, what does its journey really tell us about the future? Specifically, the future of this kind of specialized cloud infrastructure needed for AI, and maybe what kinds of financial models are actually going to survive or even thrive under this kind of incredibly fast, maybe unprecedented expansion?